The market bounced off very critical support today as we're going into the PCE data report tomorrow morning. So first up, let's take a look at the SP 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. All right. So tomorrow is a big day because we get the PCE data, and we did see a lot of price action today that's going to be very important to understand going into tomorrow's trading. So first things, of course, tomorrow will be a gap up or gap down because we do get the data report 1 hour before the market opens. So looking forward, there are some things in the price action that give us a couple of hints of what we should be looking for. So today SPY was up 0.53% and it was a very high volume day. Even though we didn't have a drastic move up or down, there was still a lot of trading activity going on underneath the surface. Now the first thing to note is that we did get that close back over $400 after we bounced off the support trend line at 397, and you can see based on the price action, we are bouncing off of support and we were below the lower Bollinger Band. And I continue to warn you, there's not a lot of downside room in the price action until these Bollinger Bands expand. So 397 is going to remain strong support until we can break down below it and allow those Bollinger Bands to expand. And then we will be looking for a retest of the 200 daily moving average, which is extremely close to being a positive slope, which is a bullish indication. So as bulls, you have very well defined risk levels at 397 and then 393. And if we break down below 393, we are very likely going back into the bear market. So it is that simple. Do not overcomplicate it, and you should have a trade plan built around those risk levels. And you can also use the risk level at 400 once price action confirms it's holding above that level. Now, as bears, you need to wait for support levels to break down before you can short using them as risk levels. And right now they're still holding up. So the risk reward still favors the buyers because this is still a bull trend if we are above support. If we break the support and we lose the bull trend, it's a completely different ballgame, and it means we could be going down into a continuation of a downtrend. But for the time being, when you have a short-term downtrend and a longer-term uptrend, there is the possibility it is just a counter-trend move before we continue higher. So if support holds, we will be looking for the upside resistance levels right around 407, the gap fill at 408, and then this resistance trend line above right around 410. And we're going to look like we're back in the bull trend if we can break out of that resistance trend line. Now do keep in mind, price action is still below a negatively sloping 5 EMA. So that is going to continue to put downward pressure on the price until price can close back above that 5 EMA. But overall, you know the risk levels and you know exactly how to manage your risk at these levels. So just draw up a trade plan. No matter which direction the market goes, you should know exactly what you're going to do tomorrow. On the NASDAQ 100 triple Qs, we were up 0.87% today. And again, we saw a lot of increase in volume today, even though we did not have a major move in the market. And we did get the confirmed bounce off of the critical support at 294. So 294 is a very critical support level because it is the neckline of the breakout of the double bottom from 260. So this is a very critical support you can use to continue to be bullish from. If we break down below that support, we have the Bollinger Band and the 200 daily moving average right there at 290. And then below that, we have the gap fill at 288. So you have very well defined risk from this support at 294, with the upside resistance levels being the 5 EMA right around 298. And then above that, we'll likely go to 300 and the gap fill at 303. And the resistance trend line we need to break to get back into the bull trend will be above 306. So you have very well defined risk levels above for resistance and below for support. So know your trade plan, whether you're trading long off support or short at resistance. Just manage your risk accordingly. In the Dow Jones, we were up 0.35%, and the Dow Jones was below the lower Bollinger Band for the third day in a row and got very close to that support right there at 327. And you could tell the Dow Jones had huge volume today near that support level, and we did see buyers of the dip. Now, anytime you see buyers of the dip when you're that far overextended, there's always the chance it's just a dead cat bounce. So there's still the chance we come all the way down to the support at 327 or fully test the 200 daily moving average right around 323. Now, if we start to bounce and break back over 338, which is that 20 daily moving average, it is going to look like a bull breakout, which should take us back up to retest 343 to 346. So I still consider the Dow Jones a giant bull flag from the October lows as long as it's above this low at 327. On the Russell 2000 IWM ETF, we were up 0.71% today, and we did get a strong bounce off of the 50 EMA, and we're back above this critical risk level at 188, which is a great risk reward setup for long positions as long as you're using that level as support. If we break below that support, we could come down to 185 or the gap fill at 180. So you need to get risk off if we start losing support. To the upside, we'll be looking for resistance between 190 and 192. And if we could start breaking out above 192, that will be a bull breakout, which means we could start running back up towards 198. On the ARKK ETF, we were down 1.51% today, and intraday we were starting to lose that support at 39, but you can see we did find buyers just above that positive 50 EMA right around 38.5. It will be bearish if we break down below 39 because that will look like a lower low after a lower high, which is clearly a downtrend, but we have not yet seen the confirmation of the breakdown below 39. Upside resistance will be 40.4 to about 41, and the resistance trend line to break is up here just below 42. If we lose the support at 39 to 38, look for the next leg lower down here right around 37. On the VIX, we were down 5.07% today, and we did see the VIX crushing back down to close the gap at 21.3, so we can delete the gap fill, and you can see the VIX is now back inside the Bollinger Bands. So we were looking for the VIX to crush because it was just getting way too far overextended, and we got that today. So from here, it's going to be a question of whether or not the VIX finds support above 20 and starts spiking back higher, or if the VIX crushes down below 20 and confirms the bull trend. On Bitcoin, we're currently down about 1.5%, and Bitcoin is pulling back from this resistance zone, and we are retesting the breakout at 23,750. If that level breaks down, we're likely coming back down to the support trend line, which is right around 22,900. And if we break that, we could revisit the 200 daily moving average, which is going to be right around 20,000. Now looking at Bitcoin, this is clearly a bullish impulse, and we clearly have a rising 200 daily moving average. So longer term, I am still bullish on Bitcoin, but that doesn't mean it can't come down in the short term before it goes any higher. So you need to manage your risk accordingly. On Amazon stock, we were flat on the day, only going up 0.03%, but intraday we did hit that support level just below 94, and we did see an impulsive bounce from that level, but overall we are still below the critical resistance at 98 and 102, which means we could be trending lower towards the gap fill at 90. Use the breakdown below the support just below 94 to confirm we're going to 90. And if we continue to bounce from here, you can stay long above this support level right here at 93.85. On Microsoft stock, we were up 1.3%, and we did get a positive bounce from the support trend line at 250, and we did get another close above critical support at 252, and we did close the gap at 256. So with the gap close at 256, if we continue higher, the next likely target will be the gap fill just below 262. It's instantly bearish if we lose support at 250 for a retest of support at 242. On Nvidia stock, we were up 14.02% today, and this drastic high volume move was likely an overreaction from earnings, and a lot of short sellers got caught offsides and got squeezed out of this stock today, and that is why we had such an impulsive day. This obviously leaves a huge gap below, which doesn't fill until we come all the way back down to 211, and we did gap above the previous gap at 230.62 and hit our resistance at 237.5. So if we break that resistance, we could reach the next target higher at 244, but with this huge gap below, you need to be very cautious and wait for a confirmation of that breakout. To the downside, we'll be looking for support between 227 and 230, and if we lose that support, we will start trending down towards the gap fill at 213 to 211. On Tesla stock, we were up 0.6% today, and Tesla volume is starting to drop off a little bit as we're finally seeing that bull flag look that we've been expecting, and we have been consolidating now between 192 and the high at 214. This bull flag is likely going to resolve in higher prices that could take us to 230 all the way up to the gap fill in the 260s. So you can stay bullish as long as we're above 196 and the support trend line at 193. If we lose support, we could come all the way back down to critical support at 183, but we need confirmation we're breaking down before we say we're going lower. The bull breakout will be back over 208, and then we should be well on our way towards the target at 230. On Apple stock, we were up 0.33% today, and Apple tested that critical resistance breakdown at 150 and still finding support at the 200 daily moving average right around 147 and has not yet filled the gap around 146. So with Apple, you need to be risk off below 150, and you can instantly get bullish if we break above 150 for the retest of the price target at 156, but this still looks like a double top from 156 while it's below 150, which easily takes it down to 146. Below 146, we can go back to the 50 EMA at 145, so there will be a lot of support in this zone, only $1 apart. On the financials, we were up 0.08%, and the financials are still looking weak below the bullish support trend line and need to start bouncing soon if they want to maintain the bull trend. The industrials were up 0.47%, holding that support at 100, but going to look a lot weaker if price action breaks below support. The healthcare sector was up 0.27%, finding support at the bottom of the downtrending channel, but overall needs to break above that resistance at 131 to go back to the top of the channel at 133. The energy sector was up 1.5% today, still finding resistance below the breakdown at 85.6, and that's the resistance level that needs to break to go higher. Critical support will be 82.6, and if that breaks, we're going to 80.5. So jumping back over to the S&P 500, tomorrow will be a catalyst to help move price action from here, and there's really no way to correctly predict where the market wants to go from here when you're in an indecision point and you could see price action going either direction. So as I always tell you, follow the price action and understand both scenarios. If we lose support, you know exactly where the next leg lower is, and if we hold support and continue to bounce, you know exactly where to take profit at resistance. Once you identify the critical resistance and support zones that I've already given you, and you build a trade plan around following price action, you are instantly going to become a much better trader, and this is exactly what we do each and every day on the Stocks Channel Discord. If you want to come trade with the Stocks Channel community, you can find out how to join the Discord server by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that does send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank Trade Alerts by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.